Expat tax returns in the US can be complicated, right? Even when there's seemingly simple situations, you're earning a wage, you live outside the US, you're not a high income earner, it's still not so clear how some of these exclusions and deductions apply. In this video, I want to talk about one specific fact pattern and situation that I've come across a bunch of times where taxpayers, tax professionals have used a rule incorrectly, and it makes a big difference on the tax return at the end of the day. And this rule is called the camp housing deduction. So it's under section 119 of the Internal Revenue Code. And what it's meant for is to allow for an exclusion from income, the value of housing provided to you as a requirement of your employment. So how this comes into play with expats is there is a foreign housing deduction or exclusion on top of your foreign earned income exclusion. And that's usually limited to about $20,000 when you look at the floor and the ceiling that they apply in the rules. The camp housing deduction allows you to exclude all of your foreign housing costs if it's a requirement of the employer. So scenarios where that's a real thing, like where I see that in my line of work, is if you're liking this video, you should really check out my newsletter where I put out different tips and tricks, latest law changes that can really help you save money and save complexity if you're living or investing abroad. Just think how much you could save with the right tax advice. People, for example, that go to work on, say, an oil field in Africa somewhere, they'll usually go to a specific site of their employer. They'll live in the housing on that site. They'll eat there. They'll work there. That's where they do everything. And it's required by their employment for work reasons, safety reasons, whatever it may be. They're required to stay there. The value of that housing may be put on their pay package, right, as compensation because they're being provided that housing. What this rule is for is to make sure you don't pay tax on the income that's providing that housing. A lot of times they won't add it as income at all. Sometimes they do, and your accountant just needs to know that you can exclude that amount. Where it gets trickier is if you're paying your employer for housing and you're trying to claim that it's required as part of your job requirement. One of the situations where I see this a lot is it's typically also in the oil industry, but it could be in any industry where the employer provides housing that you pay for to go and work in this specific location. And maybe you qualify for the foreign earned income exclusion, but you are paying rent to your employer for this housing that they provide. You know, it could be very limited where it's like where you're working way off the beaten path, like in the middle of nowhere. There's no housing, there's no hotels that you could be staying in. So they provide this housing and you're paying for it. The tricky part with that is it has to be required as part of your employment. It can't be that they provide it and it's a great deal and so you choose to pay there. And that's where I've seen this rule be misinterpreted and misused, where people are taking that expense. The foreign housing exclusion rule has these deductions and limitations associated with it that the camp housing rule does not. People could spend a lot of money on their housing expense, which could include things like food and utilities and things associated with that living condition. And under the camp rule, under section 119, all of it would be excludable. But the part most people miss is it has to be a requirement of that employment. So just because it's convenient, you're asked to be there as part of a convenience of the employment, doesn't mean you're required. If you're able to go rent another place somewhere else, then that's not really a requirement of your employment. So there's a very hard line rule with that camp housing deduction. So there's definitely situations where this can apply and it's much more beneficial than the housing exclusion just because there is no limitation and there's no floor to it or ceiling. People have to be very careful with the way they apply that rule because its original intention was not so much to eliminate or give you a deduction for housing costs you're paying, but rather to make sure that you're not picking up income for the value of housing that's required as part of your employment when you go work there. So that difference is important, and there's court cases out there that kind of break that down in more detail. If you think you might qualify for this housing expense exclusion or the camp exclusion, or you're not sure how the two fit together, we can certainly help you. Reach out at McGowinTax.com and we can talk you through your specific situation. Make sure that you're not missing out on tax benefits that may be out there from a housing perspective, but also make sure that you're not opening yourself up to unnecessary exposure and penalties from the IRS by doing something incorrectly.